Alright guys, welcome back to the channel, and firstly I just want to say thanks for all of your likes and comments and really constructive feedback on the last video. We've had almost 40,000 views on that thing in the last week, so really appreciative of that. I like to push out the message of realistic trading, and you guys seem to be really enjoying it based on the comments in the video, so thank you very much for that. Second of all, I just want to address that although a lot of people got a lot of value from that style of video, and that's the style of video that I'm going to continue to create, there's obviously a select group of people that aren't used to the transparency, the realism, and they sometimes start trolling the videos, and I want to address that. I want to talk to the people who feel that they've got this anger, and I know what it is. I get it, right? You've been duped into thinking that Forex trading, you can accumulate masses of wealth in a very short space of time, and there's one system that works, and you don't have to do this, you don't have to do that, and it's understandable. When you watch something like this, it's almost hard to watch. It's like, this can't be true. This can't be true. Everything I've believed in, everything I've told my friends and family I'm doing, I'm going to have to explain to them now that, you know, I've been led up the garden path. This is realistic trading. I'm telling you, this is what it takes, right? Having a plan, being consistent, and thinking about the average returns over a length of time. That is it. You shouldn't be committing to pips per day, pips per week, percentage return per week, because that's good doing that as long as you're breaking it down into averages. Because there's going to be, like, June for instance, or May for instance, I was just break even, whereas February was a very profitable month, April was a very profitable month, you know, May wasn't. So it's about having that consistent plan that you stick to that allows you to generate the consistent profits. And there's so much rubbish out there, I get it, there's so much junk, but what you need to appreciate is I'm just giving this value to you, hoping that you'll get an insight into what it takes to generate consistent profits and do what you like with it. I'm not selling you anything. If you want to be coached in our platform, then you can, right? But the purpose of this video is just to give you an insight into the process of analyzing the market, showing up every day. If something plays out, we have rules to get involved. If it doesn't, we leave it. It could go on for weeks without a trade. It could go on months without a trade on a certain pair. But the purpose is, the point is, we have a plan to attack the market in different ways, and we're able to adapt our analysis. The other point is, I don't really care what other people are trading, and you shouldn't either, right? It's all good leaving it as education, but I have no interest in what someone else is trading. Akil, for instance, I don't care what trades Akil's in, because I haven't got his eyes, I haven't got his trade plan. I've got my eyes and my trade plan, and I know that if I stick to my rules, I'll come out on top. I'll have consistent results. So anyone that tells you that they are certain on what the market's going to do next, I would tread very cautiously and take their advice with a pinch of salt. In fact, I'd be very uncertain about taking their advice if they're certain on what the market's going to do, because no one knows what the market's going to do. All we know is our edge, and we know the probabilities of what's likely to happen next based on our testing. All we can do is stick at the plan. So I know it's hard to understand, I know it's hard to take in, especially if you're a troll. I'm talking to you, right? I'm going out tomorrow to talk to Mike Bellafiore. Mike Bellafiore has built one of the most successful prop trading firms in Wall Street. I'm going over to chat with him because Mike's on a similar mindset, right? If you don't believe me, listen to Mike's story, and a guy who's employed, you know, hundreds of traders. He gets thousands of applicants for his trade floor that are trading his money, his company's money. So he has to select good traders. That guy knows what it takes to pick a good trader, and he certainly knows what it takes to generate consistent profits out of the market. If you listen to that video, which is coming out next week, I'm sure you'll hear the same message from him as you do from me, and hopefully you'll start to believe. All right, so what I'm going to do in this video, I'm just going to take you into the live room this morning. One of the things that I got a comment, oh, it's all good having hindsight trades. I'm not a hindsight trader, right? You saw me take the, you saw me post the trade onto TradingView. You saw me do the analysis just as I'd got in it. That's not good enough. Today, I'm going to share with you my analysis before the trades play out, show you what's on the radar, some of the trades I've been triggered into now. I'm going to go through those, and I'm just going to, and some of the trades are still waiting to play out. So you can go and look at the markets after what happened after this video. My plan is not to just, my motive isn't just to give you hindsight trades. That's not valuable. My plan is to show you the consistency. So enjoy this video. Grab a pen and paper. Grab a pen and paper and take notes on the analysis. Not so that you can copy, but so you can see the process and understand how important that is. Let me know if it's valuable. Leave a comment below, and you can find all of my social media following down there as well. So Twitter, Instagram, go and check us out on there as well. And if you like the content, there'll be plenty more of this over the next coming weeks. We've got some really good features coming up, so I hope you enjoy those. Keep sharing the content, subscribe. Let's push this transparency message out to all of those people that are getting duped. And let's, create something brilliant. So thanks for watching, and I'll see you shortly. So first we're looking at the Aussie CAD. Who's looking to short this and who's looking to buy it up? Because there's a couple of opportunities depending on what type of trader you are. Okay. What we've seen is a push down. Okay, so a bearish move, a breakdown below these previous lows, and we've continued down. So this big bearish momentum candle yesterday, broken close below. The probability is the market's likely to push down next, and if you are a trend continuation trader, we're looking at previous support to figure out where market's likely to go next. The first thing I'm going to do is look left, right? You can see that we've got some structure here, but we've also got a lower level of structure here. Now, just through discretion, what do we know about structure that's close together like this? When we have structure levels that are very close together, the lower one is typically tested more often than not. More often than it's not tested. Okay, so what that means is, as a trend continuation trader, we've got a shorting opportunity looking for at least a retest of this low. Okay, and potentially a push down to 93.40s. Now, if you are a counter trend trader, you're also going to see that this level of structure that we're at the moment, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, okay, is a decent level for a rejection, a pullback. It's likely to be held. It's likely to hold this level because we know these levels are respected in the past more often than not. And if it's tested again, there's a high probability that we're going to see a relief. So bear in mind that if you're a counter trend trader, you might be looking to buy this up at the relief, which would be a quick 1 in 1 out. You wouldn't be looking for a big reversal or anything like that. You'd be looking for a 1 in 1 out trade, like I did on the Aussie CAD short the other day. Alternatively, you wait for the pullback that's likely to happen, and then you can look to short the market. So two different opportunities for two different trading styles. One's going to be a bit more, you have to be patient and wait for the pullback, and the other one is setting up at the moment. You're still going to have to be patient because you're going to have to get your entry criteria met, but it is a decent level. It's a 94.50 level, which is all the 50 levels seem to be a psychological level in these markets, and even handles, so even handles and 50 levels. If you haven't read any good books on market psychology and these levels that are respected, I really recommend Trade What You See by Larry Pesavento. It's a really, really good book. It explains the psychology behind certain moves in the market. It explains the psychology behind the even handle numbers, fibs, ratio patterns, all the rest of it. So really recommend you go and check that book out. It's a really good book, quick to read. It's probably 200 pages. Really, really decent. So go and check that out. So as we're doing our IPDE, right, identify, predict, decide, execute, we've identified a bearish move, but we've predicted where market's likely to go next, and we're predicting a hold at this level, whether that's a continuation to the downside once we've had a little pullback or a counter trend move for a trading opportunity. We've predicted that the market's likely to hold at this level or pause at this level. So as we drop down, we're looking for clues, signals that will provide us with a high probability trading opportunity. Now, one thing that I look at next is, what do you think? Gabriel, RSI, right? The relative strength index is the lowest it's been since back in May, okay? So back in May, early May, it's the lowest it's been since early May. And what the relative strength index does is it shows oversold conditions in the market. So it really just indicates that we're running out of steam. So I'm not saying that when it's oversold on the RSI, that's like the be all and end all. That is the golden mean. It's not. But when used with other technical analysis skills like structure, psychological numbers, being able to read price, knowing if we're in a trend or at a level that's likely to be respected, it's combined technicals that make this a high probability trade. So we start to build up that confluence, and we see now we've got the RSI oversold, massively oversold. Right? Bearing in mind that RSI is considered oversold at 30. I have my limit down here at 20 because I want to extreme filters. We've gone down to we've gone down to 6. Okay, so that is massively, massively oversold. Now, let's just, before we go down and try and look for entry techniques, if we're looking for a pullback or targets on this, if we get in, where do you think would be a good place to look for targets? Bearing in mind all this technical stuff, right? Previous structure. Gab says 95, 25. Yeah, look at the previous structure levels, right? Look, 1, 2, 3. This level here would be a good indication of where market's likely to push up and test if we get this rally. Now, I just want to explain a little bit about why we might, another reason why we will see a relief rally at this point. Let's talk about trend continuation traders. Okay, so let's talk about trend continuation traders who were short. Okay, so they were short, they were selling. Where do you think they'll be buying back their position? Where do you think they'll be taking profits? Down here at previous structure, right? Around this area. So what do they have? Even if you're a trend following trader, right? Extended targets, say they've got extended targets down here, right? 1618 from the previous, look, low, outside return, low, outside return, low, right? So 1618 extension might be where they've got targets. Okay, that's also a bit of decent confluence for where we're likely to go next as well, and we're down at that 1618. So they've got buy orders resting down there. Now, if you're a counter trend trader and you're looking to buy this rally, you've also got buy orders down here. So when all of these buy orders get triggered at once, we can really see a quick rally, a quick pop back up. And that's why we're expecting this move. So now we need to figure out how we can really get involved in this. So what we're going to do is we're going to drop down to the 60-minute time frame, just if you trade on the 4-hour, you could wait for a double bottom here. So you could just wait for a double bottom. We've already gone oversold here on the RSI. So what you'd look for is just a retest. Okay. We've got that 9400 even handle down here as well, which would be really nice to get stops below. Just really nice protective level. And then what you might look for is some bullish divergence on the RSI on the initial, on the second test, the valid test, and then look to enter next bar market. You could have an ATR based stop below the low, which will get you below this 9400 as well. Really nice, really great risk reward, quick in out trade. Or obviously that's going to take a lot of time. This is a 4-hour time frame. That could take hours and hours. What you could do is drop down to the 60, which would be considered a lower time frame, and then look for a double bottom on the 60. And this will be exactly how I enter a counter trend move here. I'll be looking at the 60-minute time frame. If I can get a valid double bottom on the 60, you can see RSI is still oversold on the 60 here. If we get a valid double bottom here, right? So this is, I want to put this out on video because I tell you what, I did a video that I was already in the trade and everyone's like, oh yeah, but it's easy doing hindsight stuff. Guarantee this video won't be on YouTube if it had hit your stop loss, right? And that's not true. So I'm going to do a trade analyzing before I'm in the market. Hopefully I can get involved in this. If I can't, I'll explain why I'm not involved as well. And if we hit my stop loss, I'll explain why my stop loss was kept at that position. And if we hit targets, great. I'm sorry it was another winning trade. but I am right more than I'm wrong. So here is another opportunity looking at a double bottom. If we get a valid double bottom here, I will enter and I'll be looking for targets on this just below this structure level here. Okay, so just 95.25 will be where my targets go, plus front running, and then my stops will be an ATR below the low, whatever that might be at the time. I think it's about 30, yeah, 25 pips below whatever the low is. Okay, so I don't know that at the moment, but I'm just giving you enough information as we go through this video and explaining what I'm looking at. So this is one that's a really, really nice trading opportunity on the radar. If you're looking for the trend continuation or the move to the downside, you're going to have to wait for the pullback to happen, and then we can consider getting involved via that Graystone trend continuation, that first chance entry in here. Really nice kill zone here for the first chance entry. Really nice low test candle wick, which shows protection at this level. Look, 1, 2, 3 low test candles. That tells a story right there. We then respect that level right there. You see that? And then we can see that protection up, and then we break to the downside. So really, really nice level. If we push up to that level, I'll be looking to short. And right now, because of the level we're at and the discretion that I use for counter trend trades, I can counter this as well. So hopefully you can see the dynamics between the two. I'm not stuck in my mindset between one or the other. I just know that if price action shows me something, then I adjust my plan this way. If price action shows me something else, then I adjust my plan another way. And I've got a rule for every way to attack the market based on my high probability trading opportunities that have been tested, repeated, and verified. So hopefully that makes sense. So we may be revisiting this when we push back up. If we push back up, we never know what market's going to do next. But if we do, then I could be looking to short this via the Graystone trend continuation method. And if you haven't seen that, then it's all available inside the platform. There's 5 lessons on that entire strategy. So go and check that out. All right, all clear. All right, so the next pair is the Aussie Dollar, and it's a similar situation to the Aussie CAD, except we've still got a bit of room to grow. This isn't a level yet that you might be, it isn't a level yet that you might or might not be looking for that counter move, because we've still got a little bit of way to go to the previous structure. See this? One thing that I do like is the 9200 level, but as we look left here, I'll be much more comfortable pushing down to 7170s before I look for the counter move. Does that make sense? So although the Aussie CAD was at a level that I do pay attention to, the Aussie dollar isn't quite there yet. 7,200 is a decent level. It's not enough for me to take a counter move. However, these previous levels of structure are. Look at this. Right, look at this. We just do the same thing again. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 major levels of structure, right? Why get involved in a low quality trade just to say that you're in a trade when you can wait for the higher probability trades and have a very high probability of being right and earning money? Like, there's literally no... The only reason you're taking low quality trades is because you are more focused on just being in a trade. You're more focused on the outcome of generating money than you are the process and being patient and treating trading professionally. So I'm not even, looking at this at the moment. The only thing I'll be looking at is, similarly to the Aussie CAD, is that trend move. Okay, so I'll be looking for the trend move. We had put new low. We had this consolidation, which we broke through and put in a new lower low, lower close right here, which signified that we were likely to push to the downside. And one thing that I'm seeing here is this descending channel. So I'm looking to short this at the moment until we can push down to this 71.70 level. Next question is, how can we get involved? So drop down to the 4 hour, and this is the channel I'm talking about. All right, discretion. What typically happens when we see this channel here? Right, RSI has gone over sold. We've got that bearish bullish divergence already. What do we see? A relief. Yeah, we see a relief. Now, we could just do this all the way down to this level, which would provide a really nice counter trade opportunity. Great. But what if we get the pullback right now? What if we get this pullback? If this channel pushes all the way down to here, then definitely I'll be looking for that counter move at this level for the relief. But we might just relief before that. We might just get that relief before that. Guess where's likely to provide resistance if we pull back? Previous support. Bang, bang, got all this VS1 levels on here already for me. This is major daily time frame support. So this level here, a decent level for resistance. That's where we can look to build in our entry technique. For this instance, unless we pulled right back up into this zone, this first zone down here is where I can look for a double top entry, and I can look for a double top entry on a lower time frame. So I don't have to wait for the 4 hours to put in a double top. I can drop down to the lower time frame. In this case, it will be the 60, and I can look for a double top up here, and then look to short on a valid double top. So that is what I'm looking for on this pair. Again, it's patience, it's waiting. I can't get long or short at the moment. If this continues down to this purple line down at 71.70s, then potentially I can buy this up if my entry rules are met. If we get the pullback before, I can certainly look to short this based on higher time frame structure support become resistance, and then looking for my entry technique down on the lower time frame. Now, let's just take a look down on the day trading time frames now, because I'm still looking to short, remember, until we get down to 71.70. And you can see, if we just drop down to the 15, you can see right here that we've got, right, let's just draw this out. Low, 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 pullback, right? Got this pullback. So immediately, I'm eyeing up the previous outside return, which is this move right here. Okay, if anyone can't see that, it's this move right here. This forms the outside return. Then I'm looking for, I'm just going to take these zones off for a sec. What I'm looking for now is a kill zone where I can just short the market for a retest of these lows. How do I do that? First things first, I need to identify where I can have that one-to-one risk reward. So the first thing I'm going to do is I'm going to bring on my ATR, and the ATR is currently sitting at 7 pips on this. I'm going to go 10 pips above the high. Okay, 10 pips above the high. 43.53, so up at 53. And remember, that will change nearer the time, but 10 pips. I then need to know where my 1-to-1 is. So I'm looking at that 50% retracement there for a retest of the low. Let's just colour this red. Red. Okay, and then I'm looking for a retest of the low for targets. So can I enter this at the moment? Well, the answer is no. Because if we get a lower low, lower close, which is the signal I'll be looking for, right? So the actual entry signal will be a lower low, lower close candle inside this zone, which will give me a 1-to-1 risk reward, and it will, and that's how I'll enter next bar market. So we're not in there just yet. We're not in there just yet. We may just roll over and I miss the trade, but if we do push in and put in a lower low, lower close, then I have a high probability of being right, and I win more than I'm right when I'm right, and I lose when I'm wrong. Now, that's my style of trading. Some people have different entry signals. Some people look for a high test candle wick. So this candle here might be an entry, and you might have stops above this candle. Another way might be tweezer tops or a doji, or you might wait for RSI to go overbought and then you enter next bar market. It doesn't really matter what the plan is. All that matters is you have something that you've tested, you've verified it, you can repeat it, and you know it has a positive expectancy, and you just actually trade that way all of the time. It's one thing to sort of build discretion, but it's another thing to just change your rules constantly. That's going to end up lacking consistency, and you're just going to end up blowing your account. For me, I do a review, I do a quarterly review, and I do a 6-month review where I can make changes. You guys saw me make changes to my portfolio in June. Although I do a quarterly, I only change every 6 months, and that's because I don't want to make drastic changes. I never want to make drastic changes. I don't want to tweak things too early. I want a big sample size. I want to be profitable over the long term, and not change anything too drastically. So other ways to enter: high test candle wick, doji, tweezer tops, RSI overbought. You might you might wait for a double top in here, or at previous structure resistance, whatever it is. I'll be looking for a lower low, lower close candle, because this is the day trading time frames. Okay, so I just want to be in out. I don't want to be tracking day trades all day long. So I enter the way that gives me the least commitment to the charts, if you like. All right, so that's what we're looking at on the Aussie dollar. Any questions on that? So we're now looking at the pound dollar. Very, very, the bears are the order of the week. And the pound dollar is a very interesting level, because this is actually a very well respected level. This 2700 level, if I just draw a horizontal line in here, I don't know how much data I've got on my charts here, not enough for historical, but you can see just recently we held that level 1, 2, 3, came down, it broke through that level. You see the big bullish momentum that broke through that channel. We then pushed down, tested again, became support. Whoops. And then we're at that level again. Now, this isn't a level that I look for counter trend moves. It's not one of the levels in the market that I pay attention to at all. If I am to look for a counter trend move, we're looking at this level down here at 26.25. Okay, so I'm not interested in a counter trend move until we test 26.25. Until then, I'm on a trend continuation mission. So I'm only looking for short trades on this pair until market pushes down to 26.25. Until then, I'm not even thinking buy. I don't care about buying. I just want to sell. Okay, on my trading, my swing trading, my intraday trading. Lower day trading time frames, 5 minute, 15 minute, there may be a different story. I don't think there is. However, from my swing trading perspective, I'm only looking to short at the moment. And the reason I'm looking to short is because we're in a bearish trend, and that is because we've had a 3-point lower low, lower close, lower low, lower close. We then had a bit of consolidation before putting in a new low, and then we've put in a new low. So we're continuing down, continuing to put in new lows, and I'm predicting that market's likely to test 26.25 next. So I'm not a trend following trader, and what I mean by that is I don't have my initial target set at an extension of the trend. I'm always looking to scalp off some profit before as a retest of the low, and then I can trail secondary targets for secondary profits down to that prediction level. But I'm always taking profit off on that initial move. Okay, so I'm looking for a pullback now, and then I'm looking to short. So if we just go into this a bit deeper and looking how we can short this, all I'm doing is going through the process of my trade plan that says we look for the outside return, okay, which is this move here, right? Previous low to previous outside return high. I want to then, assuming that the market's going to reverse right now, we see an RSI oversold, so there's a good opportunity that we could push back up. I want to just see what the ATR is at the moment, and you can see that it's quite a big ATR, right? This is the daily time frame, all right? I don't trade off of the dailies, so if you do, you're going to have to get your targets right up above these highs, and there's going to be a very narrow window to get involved if you have a maximum stop loss limit. If you don't have a maximum stop loss limit, and you just, you maybe your risk is based off of a 1% of your account, and then you set your stop loss, and then your target might be a retest of lows, which will work out to be 1, 2, 1.5, 2% of your account. Great. If you're adapting your position size like that, I trade a fixed position size with a smooth ratio money management strategy, which is a bit more complex, and there's advantages of doing that. So because I do that, I have a maximum stop loss limit, so that I'm not overexposed should I be in multiple trades at once. So what we're looking at is waiting for a pullback. Okay, so 4 hour, this is my trading time frame. Although the daily kill zone is much higher, we can also see that we've put in new lows on the 4 hour. This was the little flag pattern that we was looking at yesterday, remember? Really looking at entering the breakout of this flag, but we put in this big high test wick, which made it very difficult to enter because I couldn't get the 1-to-1 risk reward, so I couldn't enter. But we did end up putting in lower low, lower close. So now we've put in another lower low, lower close. What's happening here? Take care, Ivan. What's happening here? Potentially another flag pattern. So what I'm going to do is I'm going to drop down to the 60 now. Just remove all these drawing tools off. Just keep it really clean for this video. We've actually put in a new low. See this? So all we're doing is we're going down the time frames, going down my trading time frames that I'm allowed to trade on, and looking at what's happening in the market, bearing in mind that I only want to get short. So now we've identified a lower low, and then we've had this little flag break to the downside, putting in another low, which means that we could potentially get a shorting opportunity here. Now, this candle here, does anyone know what this is setting up for? It's going to be difficult to get a Graystone trend continuation because we've spiked above this high. However, this candle here meets one of my strategy rules. And it's a strategy that's been very profitable for me based on how I trade it. We've got this bullish candle here, high test candle wick here on the 60, pushing in. If this closes in the lower third of the candle, right, this will be what I call an Ftb candle, and I call that Ftb for follow the bear. This is a move that typically happens between, it sets up in the London Open, and what we see is a setup signal candle in the 4 hour period of the London Open or London session, and then we can set out our orders, and what it is we're trying to capture the sell-off that happens in that New York crossover. And this happens frequently on the pound dollar and the euro dollar. I'm going to go ahead and enter at market here. So just bear with me here. Sorry, I didn't realize we were at the break. So this is going to be entered into this trade right now. We're just going to go check the ATR here. So we've got an ATR of 16 pips. I'm going to go 16 pips, okay? So 35, 51. Okay.
Order pending.
So the way we teach this is to have a stop loss 5 pips above the high. I'm a little bit more aggressive on the stop loss. I put you could call it aggressive or conservative depending on what way you look at it. Aggressive as in I'm being a bit more risky with my stop loss. If you want conservative stop loss, you're looking at trailing tight behind the high. I just give it a bit more breathing room. On the other hand, you could call this conservative because I'm away, and you could call the tight stop aggressive because you're really hammering in behind price action. But depending on what way you look at it. So that's the FTB. It's a pattern that happens frequently in the market. When it does happen and gives us a chance, you know, this is bearing in mind, this FTB is in line with our overall analysis. We're looking to short the market. Okay, now I don't set a target limit for this. What I'm doing is I'm just going to keep trailing this thing 4 candles later. So once this is closed, I have to wait for the next hour, and then the next hour close, and then I'll start trailing this stop loss, an ATR behind the highs. Okay, and we'll just see how this goes. So hopefully you can see that what I really want you to get from this is just the process of continuously looking at my trade plan and going, right, okay, well, I know how price action moves. I know what's likely to happen next based on what price is telling me. Therefore, if this happens, can I get involved this way? No, that's now invalidated. If that happens, can I get involved that way? Yes. Okay, what do I need? Wait for this setup. And it's just a case of having a continuous plan of rules that allow you to get involved, that you're following, you know, a tangible set of rules that you're following that dictate to you what a good trading opportunity is. Because if you're basing trades off of your opinions and your emotions, which are very subjective from day to day, you know, chemicals in your body, things that happen to us externally, family problems, business problems, money problems, child problems, hormone problems, that's going to cause you to make different decisions on different days. We don't want that. We want consistency. We want to have the discipline to stick to that consistent plan, and that is how we generate consistent profits. This might lose, but I know that it's right more than it's wrong, and I know that I win more when I'm right than I lose when I'm wrong. And if you can just stick with that plan, you're going to do very, very well as a trader. So we'll see how this one goes. Alright, so let me just remove the drawing tools on this. This is euro dollar. We're going to go through the same process. I can already see that we've hit a retest of these lows here, so that's going to stop any trend continuation trades for the short term. Let's just take a look for out on the daily. So going out on the daily time frame, similar situation to what we've seen in many of the other pairs this morning. Bearish, bearish, bearish. Again, 2 opportunities. 1 for a trend continuation, and 2, this 1300 even handle. Look, again, right? Scroll out. You can count the levels of structure that this is, times this has been respected as structure. If you're a counter trend trader, this is certainly a level you might be looking for a counter trend move. And you can see that it was actually recent previous resistance become support. We had that switch, and then we're down, pushing down to that level again. Haven't quite tested that level yet, but looking for bearish opportunities. Okay, you can see we're bearish here. We've put in our new low here. We had this consolidation. This was the consolidation that we were looking at for a long, long time, where we were getting those pattern trades. Real nice pattern trades in there. And then we broke to the downside. Bang, broke straight through that level, putting in a new low, and now we've put in a new low. Now what is this? What's this? I've just been over this in another pair. Descending channel, right? Falling channel. Right, so RSI is just tipping over sold here. What we typically see here is a relief rally. So as a trend continuation trader, I'm predicting that we're going to have a relief rally, and then I'm looking to involve myself in the move back down to retest the lows. So how do we get involved? Well, we drop down to our trading time frame. We were looking for a pullback up into that structure level. Now, what's the problem with the 60-minute time frame? If you can understand how to read price, what's the problem with the 60-minute time frame? Anyone? Already into structure, violation, lower low, lower close. Well, look, this was the level. We've actually broken close below that, putting in a new low, and then we've put in a new low. Okay, so remember on the 4 hour, sorry, we were looking at this structure level up here for a pullback, and we still can. Whoops, and we still can absolutely look for that. But anything lower, it's going to be a little bit of a different story because we've already put in this new low and we've also put in another new low. So with the trend continuation trade's only in this little zone here. Does that make sense? Because we're looking for a pullback to the previous outside return, which in this case is right here. And then we're looking to short. So we haven't got this big move anymore. So it's not valid based on price action on this time frame. 4 hour, absolutely. I can just wait for price to push into this zone, look for that lower low, lower close candle or that first chance entry, right? And then short, 60-minute, price action's telling us a different story, that we've already put in a new low and a new low. So this is the previous outside return. Hopefully you're following along, which therefore means that if we want to get involved with this, we've got to enter in this kill zone. Now you can see we've already pushed down, and if I just take off the zones here, the move that I'd be looking for as a trend continuation trader is a retest of this low. And you can see we've already hit that. It's already happened. So would I want to involve myself again if we were to push up back into this zone and then expect another short? No. No. Based on where we are in the market, this could just quite easily hold, right? Quite easily hold, and we could see a reversal or a rotation. So at this point, I just freeze. This is stopped. This is consolidation. I don't want to involve myself now until we put in another new low below these lows. Does that make sense? Hopefully it makes sense. I know it's a lot to take in. I've gone over it a bit quick, but I am trading live as well. I've got multiple accounts linked here as well. So I'm just trying to get through this as quickly as possible, but giving you the sort of mindset, the value as well. So we're looking at the pound yen on the daily. I've got some orders set here. This is for an advanced pattern trade. But I was actually looking to short this pair yesterday. We were looking to short the pair purely because, again, we've been bearish. We broke major levels of structured support looking left, broke through that level. And the next level of support was down here, looking left, at 139.52. Okay, so we've got this support level here. Support, right? Resistance, support. This level back here is going to be that level where if you're looking for that counter move, that would be the area we're looking at. So I'm, again, identify, predict, decide, execute. Identify bearish. My bias is bearish. Predict where we're likely to go, which is down here at 139.50. Now we just have to decide how we can get involved. And we did have a pullback yesterday, really, really nice move, and we didn't actually quite play out to what we was looking at here, but we had an equal measured move that we were looking at, just a little bit higher, previous structure support, okay, that we were looking at this structure level in here. We had some fib confluence. We even had a bat pattern, we had a bat pattern up there as well, X to A, a little bit higher, and we had this really, really nice zone, but it didn't quite push up. Price action didn't quite push up to that level we were looking at, and we just continued to sort of move sideways here. Now, if you're still looking for an advanced pattern entry to short this, if we look at this swing high to swing low, you're going to see that we've hit that 618 retracement. Well, what that means is we're setting up for what's called a Gartley pattern. And if you're familiar with a Gartley pattern, you'll know that many different ways to trade this. The most profitable way that we've found to trade it is the way that we teach inside of our platform. And we're looking at that extension point up here at 143.10. So this is an advanced Gartley pattern, ratio pattern, looking for a bearish opportunity, looking at targets at that 142.02. Okay, and target 2's down at 141.34. Just keeping an eye on these other trade setups. So stop loss, whatever your stop loss rules are, you might have a conventional 10 pip, 20 pip, you might use an ATR, whatever that is. You might have a 1-to-1, but that's going to be placed above this X point here. I'm going to go ahead and stick mine in to show you that I use a 113. And the reason I use a 113 inversion is because after I did all my testing, I found that the ATR base stop is typically around that level. Okay, the 113 sometimes gives a bit more breathing room, which I'm fine with, but it just saves me, particularly on the lower time frame, saves me calculating and, you know, where my stop loss needs to be. I don't want to think. I want to have the quickest way, the most systematic way to get my orders in, and that was the best way to do it. And after I crunched all the numbers on my testing, I found that it was the most profitable way for stop loss placement anyway on the strategy. So if you just take the ATR here, for instance, you've got 20 pips. That's going to put us up at 70. Okay, so the stop loss is going to be here if you use an ATR. And you can see we're a little bit higher with a 113, but it just gives us that extra bit of breathing room whilst maintaining a good risk reward on the trade as well. So that's a bat pattern, Gartley pattern that we can look out for, on that. And if we push down, as we said yesterday, anyone familiar with these ratio patterns or advanced patterns, whatever you want to call them, this is the cipher. Now the cipher pattern was actually discovered by our very own Darren Oglesby, and it was discovered when he was, by accident, when he was testing the Gartley pattern. So he was actually doing some testing, back testing on the Gartley pattern, and he noticed that he noticed certain reactions in the market when he was testing Gartley patterns at the C leg. And what he found is that every time that the market formed this pattern here, and we hit the 786 retracement, it had a very, very high win percentage. We're talking 70% strike rate. Some people have had late 70s strike rate on this pattern on particular pairs. It's one of the most profitable patterns out there. In fact, TradingView developed a tool for Darren for the cipher pattern just because of the popular demand that it has. And if you go onto TradingView now, it's absolutely everywhere. And it was Darren that discovered this. Darren Oglesby, he discovered this pattern. And he's obviously my business partner, co-founder of this tier one. So if anyone's arguing about the rules of this pattern, you're best off listening to Darren and the way that we teach it, because that is the rules. There's lots of people got different rules about this. There's so much wrong. There's so many different wrong rules of entry and how to use it. This is Darren's pattern. So very, very profitable. The best pair, if you're looking to test this on a particular pair and you do know the rules, go over to the Aussie CAD and start on that. 60-minute Aussie CAD cipher pattern, 73% on my performance on that one pair on this strategy. So very, very nice. Go and test it. Gabrielle says 82% on Aussie CAD for her. Very, very nice. Very nice. So a couple of patterns here depending on whether we push up or push down. We've got a high probability short opportunity here. We've got a high probability long opportunity here. And we just wait. We just wait and see what plays out. So I'll keep this up on the 60 and we'll see what happens. So we're going to finish up on the New Zealand dollar, and I'm going to go through this pair. As you can see, there's quite a theme today. Bearish. Okay, RSI has gone oversold. We've violated previous structure support levels, and the next level of support is down here. The next level I'm looking at is 74.30s. Okay, so down here, 74.30. You can see that it was a level that was respected previously. We had this nice low test candle here, right? This tells a story in itself. When market pushes all the way down and then we close above, that it signifies that there's some protection at that level. Immediately after that, we had a doji candle at that level, and then we held, consolidated, then bang, broke through that level. It then became resistance, resistance. We broke through, it became support. We pushed down again, it became support, support, and we're at that level again. Okay, so if I just go there, we've got a little way to go through before we can push down to that level. So my analysis says bearish, right? Lower lows. 1, 2, 3. How can we get involved short? And if you want further confirmation that market's likely to push down to that zone, you can not only look in left at structure, but you can bring on other filters like equal measured moves, fib ratios, whatever it is, to build out confluence down there. So for me, I'm just looking for bearish opportunities. Identify bearish, predict where market's likely to go. Down here, we're either going to push straight down or we're going to get a little pullback. If we get a pullback, I can look at this zone in here potentially. And if we push straight down, I can look at a counter move at that level. So the next thing we do is drop down to the trading time frame and go, right, how can I get involved? Well, you can see on the 4 hour, which is one of my trading time frames, that we've actually put in a low here, sorry, and another new low. So we've actually got an outside return right here, which means there could be an even closer opportunity to short this market and jump on with minimal or with a tighter stop loss. And as you can see, if we just drop down to the hourly, right, I'm going to remove all this off. Remove these zones so it's really crisp. You're going to see that we've got this zone in here where we could potentially look to short this market. Now what I'm going to be doing is looking where my my stop loss needs to go. So my stop's going to be right up here. I'm going to be 10 pips. 10 pips above this high. 10 pips above this high is going to put us up at 28. We're going to be looking at a 1-to-1 risk reward. As long as we don't put in a retest here, right, and we push straight back up, then I can look for a 1-to-1 right here. This becomes the kill zone. This becomes the risk. And then I just simply wait. Wait for a pullback up into this zone. Look for that entry signal, which in this case would be a lower low, lower close candle. And then enter next bar market. The other way is this right here. First chance entry, probably not going to set up on that because of the way that market's moving down here. You can see we've already, yeah, this is not going to provide us with a first chance entry. So really just looking at what is interesting about the 15-minute is this channel here. See this? Bullish divergence, descending channel. We normally see a relief, pop back up here, so then we can go back to our trading time frame, use that to our discretion, keep an eye on it. If we get the pullback, then we can look to enter lower low, lower close candle in this level. And again, that's my way. You might have a doji candle in here, you might have a high test candle in here that you enter, tweezer tops, whatever it might be. You might just wait for RSI to go overbought, whatever it is. That's your rules. These are mine. The purpose is, the key is that you stick to a plan that's been tested that gives you a positive expectancy over time. So hopefully you've enjoyed that. This is, yeah, my voice is going. I've got to interview Mike Bellafiore tomorrow from Ftb Capital. Going to meet up with him for a chat at SMB's offices in New York. So that is my analysis for the day. Just to update you, we entered one trade only on the FTB, which is just marginally in profit at the moment. we're looking for a couple of shorting opportunities and a couple of counter trend trading opportunities, and also a couple of pattern trades. There's a bit of everything. Hopefully you've seen how I've attacked the market in different ways, depending on what the market's telling us, what we're doing, what's happening, and hopefully you got some value from that, just to see that it's just the process that's important. It's sticking to the plan. Some days there's nothing happening, some days there's lots happening. It's not always winning trades, it's not always losing trades. It's just a process, and a good trade is a trade that met those rules regardless of whether it earns you money or loses you money, because you know that you have a profit over time. So it's just having the discipline to stick to that and execute to the point. All right, so that's it for today. All right, just a quick update on the what we were looking at earlier, really, in the live room. Obviously, the live room's finished. I've been doing some chores, bits and pieces. We ended up shorting this pair based on the retest in this zone. We did push all the way down, and then all the way back up, and then all the way back down. In fact, I should show you this on the 60. Almost pushed down, not quite. Didn't quite get filled, so we're still in this trade. So we'd have to wait and see what it does. It didn't quite come within 2 pips of my order, so I have to wait. If it was within 2 pips of my order, I'd be able to roll my stop down to break even, but we haven't quite hit that yet, so I can't. This is the Aussie dollar. The Ftb trader trailed down with the ATR. This pushed down really nicely. I think this was down at around, well, we're about 40 pips at the moment, and I've been trailing an ATR, so you can see it was about 16 pip ATR. Put me just above. We just escaped on that candle, continued down, haven't moved my stop for a couple of hours, wait for the close of this one, probably won't move it again, and then just see where this thing goes. So we'll keep an eye on that one. That's 40 pips up. We've got the Aussie dollar in play. This is a 7. This one we just came down, didn't quite take me out here. In fact, this one did come. I've just got 110.50 is a very well respected level in this market. I'm 2 pips above that because this is a 60-minute chart. I'm going to roll my stop to break even on this one, just because we have actually come within. I just didn't get filled, so I'm going to keep this on. This is a nice 70 pip. Probably be 75 pips when it hits target, if it hits target. And then here's one for the trolls. One for the trolls who say, you never show losing trades. This is the pound yen. About 61 pips in the red at the moment. Haven't hit. Targets have been adjusted. We don't stand to make nearly as much as we were going to make on this one originally. This is the pound yen. And we're pushing down. We may get stopped out of this. This might be a 70 pip loser. So as you can see, over the day, we've got 70 pips, 75 pips winner potentially on the dollar yen. We've got around 24 pip winner, around a 20 pip winner on the Aussie dollar if that does hit targets. And then we've got a pound dollar FTB where we've locked in profit, so we can't lose on that now. And we could potentially just roll that thing down. At the moment, we're at 40 odd pips. So there you go, 4 trades. I hope you can see the process that we went through to look at those trades. Also, just bringing back on the Aussie CAD, we're pushing up into that zone. Remember earlier when I said we're likely to see a push? RSI was oversold. Now we're pushing up. So you can see how we can predict the moves in the market. Really, it's just having a rules for entry to enter that you know provides you with a profit over time. And I know there's going to be people watching this still saying, this is rubbish, you're selling rubbish, it's a scam, and that's fine. That's fine. But this is how I earn my living, and I'm telling you, this is what it's like. This is what it's like, I'm afraid, and I can appreciate if you've been around and you've been following the wrong thing. You've been just sold hopes and dreams, or you've been told you can make a lot more money in a very short space of time, or my methods are incorrect. I'm sorry, because it's going to be hard for you when you actually see the transparency here and realize, wow, you've got to actually understand how to read price. You need to understand how to read trends and how to read structure. Then you have to have rules around an entry. You have to have a tested plan of that system so that you know that it provides you with a profit over time. You then have to have verified results in real time, whether that's demo trading or forward testing or just a small account size that you're going out trading. You have to have all that stuff. Otherwise, you're just not going to have the mental, the psychological ability to just sit through these trades. I mean, look at this. This is the dollar yen. It's just tickling my order. And this is just one of the accounts. This is just one account. And I know that if I break my rules and come out of this trade early, well, I'm letting myself down. How am I going to do that in future trades? Am I going to give back profits in future trades? So this is it. Once the orders are on, they're on. We're pushing down, seeing another little push down here on the Aussie dollar now, seeing another little push down on the FTB trade that allowed us to short the pound dollar, and we're taking probably a loss on the pound yen. But there we have it. I hope you've enjoyed the video. I really hope it gives you an insight into what it looks like every day. And guess what? Not selling you anything, just showing you what I do every day. Whether you like it, whether you disagree, that's not really my call. But hopefully you just get an inkling and an insight into what it really takes to generate consistent profits out of the market. I hope that you stop spending your money in the markets until you know what you're doing, or just be careful. All right, so hope you enjoyed it. I'm always here if you want to ask questions. I'll always answer the questions in the comments. Make sure you leave a comment, share it, like it, and I'll see you in the next one.